and welcome back to another episode of the Wealth Twin Show. Today, we're talking about all the investing myths we believe are holding you back. And with that, Nadia, I think we should get started because this is an important one close to our heart. So I'm going to let you start this one off today. What is
Okay,
an
thank you.
investing myth that you believe are holding people back?
Well, I think one of the myths that we get from a lot of people who write us is that it's too late to start. A lot of them are saying, is it too late for me to start? I didn't start in my 20s. I didn't start in my 30s. Is it too late? And I will tell you right now, I don't believe it's too late to start because if you look at the average lifespan that we have, you're most likely going to live into your 80s, 90s, and with all the medical advancements right now, into your hundreds. And if you're in your 40s and 50s, you still have decades left to start investing. So it's never too late to start. Even if it's not enough to help you reach financial independence, it is enough for you to have a better way of life because you have some investments that are working for you in the market, especially when you're not able to work as much physically, right? So I don't think it's ever too late to start. I think what is a problem is that you're going to be too scared that you're late to start and then you never start at all. And you'll never have that money being put to work for you in the market and compounding for you, especially in the years that you really need it. So it doesn't matter how early you start. My thing is, the most important thing is that you start, regardless of the age, just start.
I mean, I think the same way. I would actually push the age up older because if you look at the average age of Americans, especially women, we live longer than
Yeah.
men on average. So even if you're in your 60s, you have 20 years at least that you can, on average, that you can be put into good use. And 20 years in the stock market is a lot of time to see a big difference. And I think when people say that they believe it's too late to start, it's something that, like, too late to start for what? What is your goal? What are you trying to get out of investing? Yes, it will be too late to stay too late to start. If you have a year left and you say I want to retire next year, boom, let me get into the stock market. That's too late because what you would need to do is take a bunch of risk or a bunch of money in order to accomplish that goal. But if you have a realistic goal, it's too late not to start. The whole thing is like Nadia was saying, you have to start because not starting, that is the biggest problem you will have. So with that, yes, one of the biggest myths that we always hear people, and I don't like to say myth because it's something that's really blocking them. That's what we're talking about. Things that are blocking you from investing. It's never too late to start once you recognize that you need to invest. The moment you recognize that you need to invest, that is the right time to start.
All right. So, Nicole, we handled the myth about you being too old to start or too starting too late. What is another myth that you think that holds people back from investing?
Well, I think another myth is that people believe their cash is safe in banks.
Hmm.
Okay, so when I say that, yes, your cash is physically safe in a bank, especially because of FDIC rules, you are covered, insured up to $250,000. Now, we
Yep.
know there are people that use banks so much that they might have multiple accounts to make sure they stay under that limit of 250,000. And we have people tell us that they like having their money in the bank because it feels real to them. They can see it, they can take it out whenever they want. However, the reason why I'm saying that it's a myth that your cash is safe in a bank is because of inflation, and the rate that you're getting for holding your money in the bank does not actually cover inflation, the cost of inflation. So because of that, you're losing something called buying power. And when you're losing buying power, which is how much you can buy today with a dollar versus how much you could have bought it a year ago, even a day ago. If what you can buy now is less than what you can buy yesterday, then you have lost buying power. And the main way to get over buying power is to either invest in something that's at least at the rate of inflation, giving you a return at the rate of inflation or more. And you cannot do that by keeping your money in the bank. It's just not possible. But what is possible is that that bank is taking your money and making investments with your money that is paying them above inflation. So the bank is making money and keeping their money safe, while at the same time, you're not keeping your money safe in the bank.
Well, let me add a caveat to that. Okay. I don't think you should invest the money you need if it is within a year or 2 years that you need it. So I'm talking about saving for a down payment for a home, saving for a new car or something. If you need that
Or even
money,
emergency funds, those
or
should go in the
emergency
bank.
fund. Yeah, that's a given to me. But if you have a big purchase that you know is coming up within the next 1 to 2 years, I don't think it's worth risking that money in the market just to try to make a couple of percentage points over, or a couple of um interest, like percentage and interest over inflation, right? You're going to need that money soon enough. So you don't want to risk what's called your principal. You want to make sure that the money you have stacked away is going to be available for you when you actually need it. So if it's in 1 to 2 years, don't risk that money in the market, because we all know there is a risk when you go into the market. It is riskier than keeping your money in a bank account. Now, longer term, that's a different story. You should not look to keep a lot of money in your bank account longer term because of what Nicole said. You are going to be losing buying power. I know it feels comfortable looking at your money in your bank account. I went through that when I was going through a big saving phase, but I was saving for a purpose. If you're saving for a purpose and that purpose is coming up in a short amount of time, don't put that money in the market. If you are, I say don't put more than 10%, 20% of that money into the market to help you supercharge your savings. Other than that, after that time period, put the money in the market, because it will help grow your savings for you much faster than can possibly done in a savings account. And that includes a high yield savings account.
Now, a reason why people tend to put their money in the bank, right, is because they believe investing is too risky,
Yeah.
right? And that they can lose all their money. And this is what Nadia is saying, your principal. Now, that is true. You can lose all your money in the stock market because there's no guarantees. However, if you come in with a strategy, the strategy should be, how can I protect my principal, and then how can I grow it? So you
Yeah.
have to go in with the right mindset and understand you need a strategy that's going to help you not lose your money. When you go in and you use the stock market as a way to, yes, you can either win a lot or you can lose a lot, just like you would if you go to a casino. But if you don't treat the stock market like it's a casino, there are many ways that you can actually save and protect your principal, and you grow your money at the same time. You may not hit a home run, but that's not the purpose for someone who believes I cannot go on the stock market because I'm going to lose my money because it's too risky. Okay. There are ways to get around that, and you have to understand that.
Now, well, we're speaking to a particular type of person, right? We're not speaking to the people who are going to blow everything they've been saving into the market. And if you do, that's more like
Good
that's a
luck to
bad
you.
decision. It's a bad decision. You don't risk it. If you took the time to save your money and you're really hesitant about putting into the market, I doubt you're the kind of person that's going to gamble. But if you don't know what you're doing, it's very easy for you to get into those gambling situations. If I'm looking at another false belief or myth that holds people back when it comes to investing, I would say that they believe that investing is too complicated. Now, this kind of piggybacks of what we were just saying. If you're going into something new and you're trying something that you've never done before, there will be a level of complication, right? But investing, there's different levels, right? The more complicated you get, the riskier investing is going to be for you. If you keep it simple, plain and vanilla, it's not going to be as risky as it can be. Now, I say this because, yeah, we know there is risk involved in the market, but you don't have to make it complicated. If you keep it simple and you understand what you're doing, you're going to put some mitigation around that risk, and you'll understand what you're getting into. And then you're going to make an educated judgment about what you should do when it comes to investing your money. The main thing is educate yourself about it. Keep it simple until you learn the more complicated things to do with your money. But at the beginning, it doesn't have to be complicated at all. It's like anything. You could start out simple, and then there's different levels that are way more complicated. That goes with art, that goes with music, that goes with anything. There's different levels.
Now, with that, there's 2 points I want to bring up. One, there are rules to this game, right? There are
Hmm.
rules if you want to gamble, there's rules to that. There's rules when it comes to the investing game. And the rules that Nadi and I use to get around this, because yeah, we had to learn how to invest too. It
Yep.
was complicated for us too. There is a learning curve. But if you're like me and Nadia, and I'm sure a ton of you are, we did not grow up with a silver spoon in our mouth, and we did not grow up with savings. So the savings that we actually had to create and the jobs that we had to get to give us the money to, potentially invest, we had to do hard things, right? And we had to believe in ourselves. So with that, you have to be able to understand if you've done hard things in the past, you can do hard things in the future. There is a learning curve to this, but once you learn the rules, right? You can actually get this done. If you believe that you have done hard things in the past, you can continue to do hard things in the future, and you can see the benefit of that. Now, the second point of that is the stock market can be risky, but you know what else can be risky? And a lot of people don't think of it this way. And I had my mindset changed years ago. Having a good paying job and relying on that job only is one of the riskiest things you can do, because you become too comfortable and you think that job will always be there for you. But if you don't have a backup plan and you don't have another way of getting some type of income coming in, you are depending so much on a job where you don't control the paycheck and you don't control the hiring or firing. That is much riskier than betting in the stock market or investing in the stock market.
I think I learned that lesson very early on because when we started working on Wall Street, about 6 to 8 months later, there were a round of layoffs. And you see people who have been working there for 20, 30 years who came in every day, did their thing, and then they were called into the office without any warning. And then they were let go. And I was like, oh my God, these people have their kids in school, they have mortgages, they have families they have to take care of, and then all of a sudden that's all taken away from you without any kind of warning. And if you're lucky, you may have got a package, right? But I saw that very early on, and that told me, hey, anybody could get it here. It doesn't matter. Like you see people who you thought were untouchable, and they were getting called into the office and walked out by security. So that let me know right then and there I had to make a different financial plan and not be comfortable at my job. I went so far as to, working in a cubicle, you see people put pictures up and they have different decorations. You would not have known that I worked in that cubicle because all I had was the bag and a pair of sneakers I would switch out to my shoes that day under my desk. You did not know who was sitting there. Maybe my name tag was on the cubicle or by the door of the office. There was no personal effects there because I knew it could change at any moment. And that mindset made me go into save the money you're getting here, invest what you can, start early, keep your expenses low, because this job is a lot riskier than what people are scared of when it comes to many things when it comes to handling their money.
I mean, Wall Street is a different place, right? It's tied directly to the economy and tied directly to businesses.
Or tied
So,
directly to the economy of that bank. Let's put it
of that
that way.
bank. So, with that, yes, there's some great years that we had where it's like feast or famine kind of thing, right? And we came in during the feasting part, but it quickly became famine. And you actually don't know. You hear rumors or so, but you don't know. And it's usually like on a sunny day. I don't know
It'll
what
be a
it is,
beautiful
but
day. Be like, you could have told me, you could have
and they
told me
never do
before
it
I
on a
came
Friday
in.
either, right?
It's
Let the
never
person go
Friday.
home and get the weekend. They do it on a Monday. They make you come in, right? Sunday day, they call you in the office, and then all of a sudden you see the person come out with a sad face and holding a box. And they give you like 5 to 10 minutes to
You were
get your
lucky if you
box.
got the box. They would be like, they walk you out with security with your ID card taken away from you, and your
Yeah.
coworker who still had their job had to pack your stuff up for you if you couldn't
Yep.
grab something quick enough.
I still remember when I first started working on one of the desks. One of the older guys on the desk told me, said, Nicole, just remember this: no one is your friend here, right?"
Mm-mm.
And everybody was friendly, and we all had a good time. He said, "But if you leave this job or lose this job, no one will talk to you. No one will try to cover for you. No one will have your back." Okay, so you had to understand that going in, being in a situation where you don't have much control, and understand you're not going to have that much support. It's very risky, okay? Because on one end, you're getting paid well and they're giving you the lifestyle that you want. It's like the American dream. But the other hand, they can take that American dream from you as soon as they give it to you. So because of that, yeah, I was like Nadia. I didn't have anything at my desk, not that much that I cared about. And if I did, if I was going to leave, you could have kept it, right? Don't send me that box. Don't even bother, right? It's just that's the way we grew up, and that's the mentality that we had because we saw it very early on. It was like a blessing or a curse. So because of that, we relied on investing to help us get some type of like power, individual power that we could take back and have it whenever we needed to. And we had to activate that power a few times, but it's because we made those moves early on that it gave us a sense of comfort that I don't necessarily need this job. I want to be here, but the moment I don't want to be or they don't want me here, the investments is what saved us. And you have to understand that.
I agree. And it also it stops you from allowing people to treat you any kind of way because you don't need that job, right? I would say another myth that people have is that the only way to make real money in the stock market and through investments is that you got to day trade, or you got to do forex, you got to do something that you got to sit there and watch your computer all day long.
Side note, Nadia, have you noticed that some people do that whole forex? They're trading in currencies and countries they never even visited before,
Never
or
even
at least
visited.
read the paper. Like, you can't tell me what's going on with, like, the euro if you've never been to Europe. You gotta understand
Exactly.
the deeper meaning behind this. Okay,
Like,
my bad.
come on, it kills me because what's the phrase they all use? Like, oh, they got the software. Really, bro? Really, the
You
software?
said,
like,
bro.
bro, the software. Tell me a Ponzi. Tell me your Ponzi scheme without telling me your Ponzi scheme. Tell me,
Wow.
bro. I have the software for somebody in high school who didn't do good in math, and you trust and they have the software. I'm just saying. But
Mm-mm.
anyway, my thing is this: is like if you think the only way to invest and make money is through day trading or through foreign exchange. That's not true. There's so many disciplines within investing that everybody can make money in. It just depends on your risk tolerance, the level of education that you want to have when it comes to investing, and how long your timeline is. You can make money in bonds, you can make money in stocks, you can make money through dividends, you can make money through index funds, ETFs, you can make money on margins or shorts, you can do whatever. You can options, whatever. It just depends on what your risk tolerance is and how risky you want to be with your money. It has nothing to do with a particular discipline. There's many ways for you to make money, and you don't have to fall for the trap that people are trying to tell you there's only one way. There's different personalities and different people, and there's as many of those ways to invest in the market to make money for yourself as it is that exists for the type of people who can invest in the market. So don't get caught up with this one thing and that one thing, and these people are winning here. Maybe that won't work for you, but there's other ways. So don't let that scare you from investing in the market. What do you think, Nicole?
I mean, there's a couple of things that you left out I can put on is like you can
Okay.
make money when the market is going up. You can make money when the market is going down. They
Yep.
have a saying, bulls make money. That means people who believe the market is going up. Bears make money. There are people that believe the market is going down, but pigs get slaughtered, right? That means
Hmm.
that when you become greedy, that is the biggest chance for you to lose your money.
I agree.
So with that, yes, there's tons of way to make money. One size does not fit all, but it all based on those three things that Nadia said. What are your goals? What are your timeline? And what is your risk tolerance? And each one of those things can change as you get older, as your family, as your lifestyle changes as well. So who you are 20 years ago might not be the same person you are 20 years later. Okay. So you have to understand that as well. Another myth that we get a lot is I can't invest right now because the market is overpriced. It's too high right now, right?
Hmm.
So I'm waiting for a good time. I'm waiting for the market to go
You're
down
going
a
to
little
keep
bit.
waiting. You're going to
Yeah,
keep
you're gonna
waiting.
keep waiting. That is called timing the market.
Yep.
And what is more important than trying to time the market, which if you could please let me know, I'll give you my direct line. If you know how to time the market, let's talk, right? But it's impossible. You can't time the market. There's too many factors out there, and one of the biggest factors is psychological factor or the human factor that plays a big part in the stock market. So if you understand humans and you know what they're going to do, what their next move is going to do, then yes, you can be a billionaire, even a trillionaire in this game. But because of that, you can't. That way, it's too hard to try to time the market. So instead of waiting for the best time to get into the market, the best thing you can do is get time in the market, which means just get in the market and then ride it out. And the longer you can ride it out, the more chance of success that you can have.
Yeah, I agree. And I was making fun of people like waiting the time, but the thing is, a lot of people do wait. And your most important thing that you have on your side, regardless of how much money you have, is time. That is your biggest asset. So if you're just waiting on the sidelines, waiting for the perfect time to get in, it will never be a perfect time. So get in, just start, and then figure out your way as you're doing it. But the important thing is to stop wasting time, because I know plenty of people who wasted 10 years, 20 years, missing out on good times in the market simply because they were too afraid to step in, like they're playing double dutch or something. Step in the market, figure out what's going on, and at the end of the day, I don't think you will regret going in responsibly. I think more people regret never investing than the people who say, I started, I made a couple of mistakes, but I had the time to recover because I took that time to put myself into the market and learn as I'm going. You're not going to be perfect. Nothing's going to be perfect, but wasting time will do nothing but stop you from the gains you could possibly make in the market.
Now, when you say just start, I want to give people a little bit of direction. One,
Yeah,
if you're watching this video, you have already started, right? You're starting to try to educate yourself and get deeper into the subject. So we
I agree.
applaud you for that. The second thing you need to do, you need to figure out who is it that you can trust that's going to give you the right information and actually help you get rid of all the noise that can affect you from actually doing well in the stock
Hmm.
market. If you believe Nadi and I can help you and really tell you something that might actually put you on the right path, and that you believe in what we're saying and you think that we're not going to be the ones that are going to gamble with your success and also with your money because we don't do it with ourselves, then please join our free email list called the Wealth Pack. The link will be down in the description below.
Yeah.
That way you can get a message from us every week when we try to educate you about different things in terms of investing. It could be stock market, it could be real estate, it could be business, but we're focusing on that, giving you clear information, and then all of the emails will have some type of action or some type of plan that you can understand. So if you appreciate that, just go down link at the link below and just sign up for our free email newsletter called the Wealth Pack.
Yeah, and we have courses available too that are made in simple ways. But our main goal here is to get people stop being scared about investing. Like we know where you're coming from because no one in our family knew how to invest. We barely no one even had a bank account, okay? I learned how to write a check when I was 21 years old. So, we know it's a big stretch, but we know how much of an impact it can have in your life once you start investing. You don't want to work for your entire life. Use the money you're making now to help you in your later years and make life easier for you because that money is going to get spent regardless. So you might as well invest it so that money could compound in the market for you and work for you when you choose not to or where you can't.
Now, I would say the last one I'm going to say in terms of investing myths is you believe someone else is going to come and save you. A
Yeah.
lot of people think that it's going to be Social Security or the government that's going to come up with some program or make sure that Social Security is there and maybe actually increase it. That's going to be what your lifeline is going to be like. So you don't have to take the responsibility of actually making sure that your finances for the future are secure enough that's going to allow you to live a comfortable life outside of work when you can no longer work or you choose not to work. No one's coming to save you. And the minute you understand that, that's the minute you realize, yeah, I got to get past these things. And definitely, that's when, and I think that's what triggers a lot of people with the whole, is it too late? It's never too late. Once you realize that fact that it's on you, that's the time to start. That's the best time to start. And if you can actually learn from other people's experiences and not have to go through that pain or that wake up call late, that's even better.
Yeah, you're even ahead of the game when you take the time to learn from other people's mistakes or take the time to learn before you start doing or at the same time. My thing is this if you're waiting around for Medicaid, Medicare, or Social Security to save you, have you seen what like government programs are for like a huge general population, right? When anything is like that, it's not going to be the best. And you're most likely going to have to go through hoops to even apply or even be eligible for those types of programs. So why put yourself in that position if you can avoid it? If you
Yeah, and
can't
actually,
avoid it,
technically, navigating those systems probably harder than learning how to invest. Tell
I
you the truth.
agree. And you have to make yourself so destitute to even be eligible for those programs. And those programs are not going to have the best services. And I'm sorry if it's being real. If you have the ability now and you're making a good salary or you're making enough to cover yourself and your family, you want that in your later years. You want to be able to help people out when you get older or help yourself out. So don't depend on those things. Investing is for your benefit. Don't be scared of it. The myth is that somebody's going to take care of you. That is a myth. You are responsible for yourself, and the more you take that responsibility, the easier things will be for you because you know what you put that plan in place earlier or later. It doesn't matter. At least you have a plan.
So, with that, now do you have any more investing myths, or we're going to close it out today?
We'll close it out today, but if you guys have any investing myths that you want us to bust here, make sure you put it in the comments below. We love hearing from you guys. And if you see this video and you like it, make sure you share it with someone you love and subscribe to the channel. All right? So thank you guys, and we'll see you in the next episode.
See you in the next episode. Bye bye.